You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 30th day of November 2017. End of the month. 1 month left in 2017. Hard to imagine. Time sure does fly. Well, if you're returning, welcome back. If you're here today for the first time, a special welcome to you. We are so glad to have you with us. I have a chart up of the S&P 500 Emini Futures. If you want to be able to see the charts throughout the program, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. Within 30 seconds, you'll be registered, and you'll be able to see the charts, and you'll have access to the chat box and be able to ask any question you like. Unfortunately, you'll have to do the same thing again tomorrow, because we always register on the first of the month. Everyone has to. And then you're good to go for the entire month. You only register once per month. After you register, you have one-click access to the show every day for the entire month. The other option is to go to youtube.com/CFRN/live. Bookmark that page once you get there, and you'll have one-click access every day. Okay? All right. Well, happy Thursday to you. December's upon us. Tomorrow, December 1st. This has been from Trump to cryptocurrency. I don't care what age you are. I think you have to agree this has been one of the most eventful and unusual years in your life, no matter how long or short it might happen to be. But we're glad to have you here with us on this Thursday. And today is our every other Thursday. So Ed Coury will be joining us. In a previous lifetime, Ed, a few years ago, Ed was a commercial crude oil trader where we trade contracts. He traded ship loads, ship as in boat, ship loads. And now every other Thursday he comes here to the show. He's our resident Elliotician. He does the wave counts for the various markets and just gives his thoughts, ideas, and opinions. He'll be joining us at 1/4 to the top of the hour. So real quick, let's just run through the numbers, and then we'll go to Mike and get a recap of the live training room today. All right, we'll start here in the U.S. These are the cash markets, okay? The Dow currently up 212 points, almost 1%. NASDAQ up 47 points. That's over half of 1%. S&P 500 up 19.5 points. That's 3/4 of 1%. And the Russell 2000 up almost 5 points. So it's certainly a green day in the US of A. Commodity basket, crude oil is down 13 cents, trading 57.17 last. Gold down $8.10, trading 1278.10 last. In the Asian markets, mixed there. The Nikkei closed the session up 127 points. That's half of 1%. Shanghai closed down 20 points, half of 1%. And the Hang Seng closed the session down 446 points. That's 1.5%. Last but not least, we go to Europe, where the color of the day there was definitely red. The FTSE closed down 67 points, almost 1%. The DAX closed down 38 points, and the CAC closed down 25 points, which is almost half of 1%. So those are the numbers from around the world. Asia mixed, Europe deeply in the red, and here in the US of A, green as far as the eye can see. So we got John joining us on the show today, and again, Ed Corey will be here at 12:45 Eastern. So if you have questions for him, be prepared to put those into the chat box. And with that, Michael, we will scoot over to you and get that recap.
All right, let me swap it around here. Here we go. Getting some good volatility right now. Gotta say, good volatility right now.
Yes, indeed.
Okay.
All right, I'll hit mute over here, and I'll be here when you're done.
All right, sounds good. All right, everyone. Good afternoon. Today is the final day of November. It's the 30th day of November, 2017. Let's see. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage here at CFRN.net. Right up at the top, it says sign up for the CFRN live training room. 100% free trial. User indicators on our strategy. Click here. Once you click there, you will be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, you will not get the free trial. I'm sorry. Once you click there, you will not be sent the confirmation link. You will be sent to this page where you have to put in your email, your first name, and how you found us. Hit the submit button. Then you'll be sent the confirmation link. Okay. Sorry, I skipped that part. Then you'll be sent the confirmation link. And once you have the confirmation link, just click it and confirm that you wanted to take a trial. And then you will be sent all the information you need to participate in the live training room for 5 magnificent days. All right, the spreadsheet. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 30th day of November. We made 32 ticks in the euro, 12 ticks in the Russell. We lost 7 in crude and we lost 8 in gold. That put us at plus 110. Plus 110. Today it took 90 minutes and 13 trades to get to the goal for the day, and we took a total of 16 opportunities today. Okay. On the month now, this is how we're going to end the month. $2,576. That's over 19 days, averaging 135 per day. Okay, so not a bad month. $2,500. Not bad. And let's see. On the year, $30,858. That's over 224 days, averaging $137 a day. Okay, that is the spreadsheet for today. Now, go over the trades. We just had some great movement here in a few different markets. But with the gold, we started out by missing this trade right here on the gold at 935. And then we took this one, the follow-up, and it stopped us out. And then it went up and did what it should have done. We only had one more opportunity during the morning session. We ended up with a break even on that. But right here during the break, it just had this nice leg down right there. And another one. Nope, the cycle's going up too steep there. And that was it. Just this one leg down is all we could have gotten into. On the euro. The euro had a beautiful trend today. Okay, right here, our first trade on the euro, we had a break even, but the second one we picked up 10 ticks. Third one we picked up 4 ticks, and on this one we picked up 17 ticks. Okay, and then we had 1 tick there. We missed that one. We got 1 tick there. We missed that one. And during the break, there was a shorting opportunity there, and there, and there, and there. And that was the euro. Now on crude. Let's see. On crude, we missed the opportunity right here. But we stopped out on this one. Okay, so we had -8 on that. Break even there. We missed this one. Missed that one. And we had +1 on that. We missed that one. And we had a break even on that one. Let's see, during the break, what was going on here with the crude? And the slingshot's all messed up in here, so the only opportunity would be a possible long right now off of the BBC. Okay. Does anybody have any questions about any of this? Anyone? Questions? The Russell. Let's scroll back here on this. Okay, so we started out right here with the Russell. We got 10 ticks profit on that. 2 ticks profit there to put us at +12. Then we had a break even there. We missed that short. Oops, I forgot to count that one. I forgot to count that one. We had 2 ticks there, so we're actually +14 on the Russell. But we had a break even there. We missed that one, and plus a couple of ticks there, a break even there. We missed that one, and that one. And let's see, this is all during the break right here, and we didn't have really anything in here. One long right there off the BBC would have been a break even. And a long off the BBC again here. That's about all there was. Okay, now the ES had some good volatility today. We picked out a couple of trades. This one would have stopped out, and this one would have gotten it back for you. Let's see, at the end of the session, there was a short off the BBC right here. It would have been a break even, and it changed directions, and it has not given a trade setup yet. The ES is at the high of the day right now. Okay, so let's go back here. We've got to fix this. This should be 14. And number of trades goes up to. Okay. So, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We made 32 ticks on the euro, 14 ticks on the Russell, lost 7 on crude, lost 8 on gold, so we're +120. +120. All right. Let's see. Today it took 90 minutes and 13 trade opportunities to get to 103.75, and it took a total of 17 trade opportunities. So on the month now we're at 25.86 and a quarter. That's over 19 days, averaging 136 per day. And on the year, 30,868. That's over 224 days, averaging 137 per day. Okay. That is where we stand on the day, on the month, and on the year. Now, if you have not taken a free trial with us, go to the homepage here at cfrn.net. At the top says sign up for the CFRN Live Training Room, 100% free trial, user indicators, learn our strategy. Click here. When you click there, you will be sent a confirmation link. You must click on, when you click there, you'll be sent to this page. All we ask for on this page is your email, your first name, and how you found us. Then you hit the submit button. That's called a double opt-in. That's so we don't spam anybody. Okay. When you hit that submit button, then you'll be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click the confirmation link, you will not get a free trial because we don't know you took the free trial until you click that link. All right. All right. And with that, we can pass it back out to Studio A, fabulous Phoenix, Arizona. Overlooking South Mountain, America's largest city park. That's what Dwayne is. Dwayne, are you there in Studio A?
Yep, right here.
Okay. Alrighty. Reminded everyone, there's a partners meeting tonight, 9 p.m. Eastern. You must be a partner to get into the meeting. Okay. So if you're considering being a partner, you must become a partner before 9 p.m. tonight, Eastern. And if you don't know what it takes to become a partner, then just send me an email at support@cfrn.net. Support@cfrn.net. Okay. That's it.
All right.
Yep.
Okay, Mike, thanks.
All right. A recap?
Recap of the recap, sure.
Today it took 90 minutes and 13 trade opportunities to get to 103.75. 103.75.
Per contract.
Per contract. Yes. In 2 hours. Well, actually, 90 minutes, an hour and a half it took this morning.
Good job. Good job.
Thank you, my friend. All right.
Okay, guys, S&P 500 continues to race higher. We'll talk about that here in just a second. I see John's on with us, so let me get his mic open. Hey, John, welcome to the show. Are you there? No, he's logged in, so I'll get him. And a reminder, Ed will be joining us here in about 25 minutes. So stick around for that. Well, there we go. All right, John will be joining us here in a second. Let's talk about this right here, okay? Yesterday, we had, let me just back it up. All right. We had a leg and a retracement. A leg, consolidation, retracement, consolidation. A leg, and then we pull back to the highest weekly trading zone for the week. Okay. We consolidated, and we went over in great detail on yesterday's show. If you missed it, you can go watch the recording. That price would pull back into the zone, consolidate, and then do one of two things. Continue the move higher, or it would be leg, retrace, and then we would come back to the 1516. Now, my thoughts, and I was careful to make sure that those were just my thoughts, was that we would come back to 1516 and test that a bit before the move higher. But it had already been tested, and so I guess the market felt no need to do so. And now it's flying so high so quick that it's almost a little bit frightening. But that's it. That's your market. Now, this is the highest weekly trading zone for the S&P. Do we often trade above the highest or the lowest zone? Not often. But we do on occasion. We first started publishing the zones December 14th of 2009. Now, would be 8 years, coming up on our 8th year anniversary. Yeah. We have had weeks where price would close the week above the highest or below the lowest, but they have been so few, very, very few. So be it. If that happens this week, it's an anomaly. We don't change anything. We don't do anything any differently. We just keep doing what we're doing, and we always expect the unexpected. We embrace all the possibilities out there, and when it moves higher, what do? You simply trade what's in front of you. Now, the further this thing goes, now we would need, in order for it to close below 26.25 tomorrow, we would need a 25-point drop. Can the market drop 25 points in a day? It can. It rallied 25. Are we predicting that? No. We're just saying that based... Hey, John. Welcome to the show. Hi, John.
Hello.
Welcome to the show.
Hi, how are you?
Good. How are you?
I didn't know. Not too bad. Been pretty busy today. There's a huge amount of stuff going on.
Oh, yeah.
One of the most notable things that's happening today, which is probably if we'd kind of seen this in advance, we wouldn't have been kind of eager to try and pick the bottom of the VXX, but we managed to do that at least yesterday and the day before in the low 31 area on the VIXs. And what's fascinating is here we are up 300 points on the Dow, and the VIXs are going higher. So this is a sign that the market is, it is a volatility index. So as the volatility is increasing, so the value of the VIXs is starting to go up, which is a very good thing, because there's a point, I guess, where you go much lower on these things, and we may have reached that point. And what a lot of people may not know is that this is why this market is so different from the 90s and so much stronger. For a lot of the late 90s, the VIXs actually were a lot higher than where they are right now, even though we were on our way to 10,000 or 11,000 at the time. This is when we were around 7,000, right? So during the VIX, I think, is going to become a much better trading vehicle from now on, because if we did, I don't think it's going to happen today, because this is a really powerful rally, because John McCain basically has come on board with this tax cut. Mm-hmm. And that's pretty much, I think they've got about 50 votes already, so it's pretty much a done deal. And that's a huge gain for the world and for America and for everybody, because we got to be up around 6 trillion in net gains right now, especially if you throw in the cryptos as well. We're virtually there, and this is a staggering amount of money that has been created in the last year, and it's definitely changing a lot of lives for the better, including from rich to poor. Right down to the bottom of the barrel. Mm-hmm. Everybody is benefiting from this, and there's I think the enthusiasm and the upbeat we've had record shopping days, greatest Thanksgiving ever, greatest Black Monday ever, greatest Amazon day ever, greatest Baba day ever. These, right. and there was a thing that came out yesterday saying that the Chinese, just put the biggest stimulus ever, like 100 billion or something. I'll have to go back and research that, but and it didn't it didn't move the needle for the first time. The economy didn't respond. Well, it's quite interesting. I think what they failed to grasp in that article is that the economy in China is so much bigger today. It's probably a 15 trillion economy or somewhere like that. 100 billion ain't going to cut it anymore. You got to really, you got to probably do $1 trillion or $1.5 trillion to really get the economy moving. But it's not like a vending machine either. You don't sort of put the coins in and the product comes out the bottom in the same moment. Right. It takes time for the economy to respond. So And I think it's fair to say that the way we're going right now, next year is going to be, some kind of an incredible year for the economy, like, we haven't seen in decades. Remember, this is before the tax cut came out in the Reagan era in 1984. The economy grew by, I think it was 7%, 7.4%. And so, given that we're, look, remember our theory was 1, 2, 3, 4, right? 1% in the first quarter, 2 in the second, 3 in the third, and 4 in the fourth. And because we got 3 in the second, and we now 3.3 in the third, we certainly exceeded expectations. Just 1 second, sorry.
Okay, in headlines, Snap CEO Evan Spiegel.
Okay, I'm back.
You're back? Okay.
Hello?
Yeah, right here.
Okay, great. I'm back. So the likelihood. Look, when you get a market going like this, we've said before, the economy tends to, happen a year later. If we're here, we are at the end of November. A year from now, 9 months to a year from now, if the economy isn't absolutely in maximum velocity by the midterms next year, we're going to have an experience that's never happened before in the midterms. And maybe a year from now, the penny's going to drop. People are going to say, boy, did this guy ever change the world or what? Because it's and listen, somebody came out. Oh, Gary Schilling, he's an economist. Mm-hmm. He's a pretty good guy. I've actually met him a few times, and he's saying that Trump deserves some credit for the bull market. Listen, unless he doesn't just deserve some credit, he deserves most of the credit for this economy. And I'm not saying that regardless of whether you like Trump or not. We've said this on this show a long time ago. If September the 28th, 2015 was the day that Trump came out and announced his tax plan. And actually back then, if you remember, the way he announced it was better than right now. It was 15% corporate, and it was the first 50,000 for a married couple could be earned tax-free. It was a fantastic deal. It's still a great deal, but not as good as it was. But remember we had the flash crash on August the 24th, 2015, where we dropped 1,000 points in one day, and then we came back, and then we went down into late September and made a secondary bottom. If you go and look at your chart, September 28th, 2015, that was the low of the Dow, and I believe on that day we forecast a 2,000 point rise, or the day after, forget which, and that's what we got into Christmas, into the end of the year. And then we had the incredible correction in January and February. And by the way, so look, there's a little secret. A lot of times the market doesn't do the same necessarily a year later. A lot of times, remember a year ago, the market was actually down from September through November, and we did point that out that this year it might go the opposite way, which it has. And so. What we've got to be careful of, not necessarily, the 1st of January or the beginning of January, but just like in '87, a really humdinger of a correction came, I think, in February, and then we went back up into March and April, and then we had a much bigger correction in April and May before we had a 30% blow off into the highs of '87, and I think 2018 could be, similar to '87, in terms of the mania that may be developing as we speak. So, it's interesting that I'll get onto the cryptocurrencies in a minute. It's interesting that they're kind of crashing today, while the market's going higher. The market being the real deal, and I think the cryptos being kind of fantasy market, really. So, and the fact that they're coming off today in a mega bull market in stocks is reassuring, to say the least. But going back to the tax, to the Trump thing. So that was the beginning of, look, the market has an uncanny ability to see things into the future that human beings can't get their arms around. It's commonly known that 99% or 90% of most of the mainstream media were laughing about Trump ever winning, and very few people, except ourselves and others, call this thing as well as we did. But the market, there's an old adage, if the market goes down from September through November, or August through November, usually means the incumbent's going to lose. And since Hillary was a quasi-incumbent candidate, that's what happened. So there were signs all of right from literally from September the 15th, September 28th, 2015, through. By the way, the VIXs are starting to accelerate higher right now, and from September 28th, and then we rallied into Christmas. Then we had the really sharp correction in 2016, and on February the 10th or 11th, Trump won New Hampshire, and as they say, Iowa picks corn, New Hampshire picks presidents. That was the second turning point. And that's when we forecast another 2,000 point rise off that bottom. And, we're still going up ever since. So really the bull market made a fantastic double bottom, a multi-year double bottom, 2015, 2016, and has been an absolute unbelievable bull market ever since. And here we are right now, 7,000 points higher from the election low, almost 7,000 points higher from the election low of the night. So you and I will never forget. So, and by the way, I have to congratulate you on your incredible calls, with your system.
Thank you very much.
Overnight, because look, you know what today does? It absolutely blows away all the, sometimes you've had a few false starts here and there. No system is 100% perfect. You've got to take the chips with the, you got to take the chinks that you get in the battle market. But we, in the last few days, story gains. You caught the last downside. You caught the downside in the Nasdaq yesterday. You caught the upside today. I mean, give me a break. That's an incredible system. And for the new people who are just tuning in, I mean, listen, we've been doing this you've been doing this for years, and you and I both, between us, we have this market nailed pretty much all the time. I mean, me, I get bearish usually when I get a bad feeling about markets, and just like I did recently when we shorted all the fangs right at the top. We covered them yesterday afternoon, and look, when I put a kind of a blanket buyout, I basically say, maintain long positions on all rising markets, and that I went from falling markets, earlier before this, this correction that we had, the rocket thing yesterday, and then, or whenever it was, and then we went bullish on the markets again, and we're still bullish right now, until the market says, it's going to change. So, and we have to be, I think you have to be very careful tomorrow, because it's the first day of the new month, and sometimes you can go from a raging bull kind of a deal like this to a pretty sharp correction. because habitually it doesn't necessarily have to happen tomorrow because we're in uncharted territory here. But you know, it's important to keep in mind, and while we're screaming higher in the S&P and the Dow and the mid cap and the Nasdaq now, the semiconductors are not going anywhere today. In fact, they're pretty much not even rising. The tech is not that much higher either. And the VIXs are rallying. So you've got starkly interesting divergences developing here. And it doesn't rule out some sort of a, look, they could announce this tax plan and the market could sell off. I mean, I don't think it's going to sell off for long, but it could sell off sharply. It could be like another Trump, sell-off after the election, where you might have in an extreme case, we could have a 500 or 1,000 point downer, followed by a screamer back up. The same sort of thing as what happened, just over a year ago. Mm-hmm. And so just like we had with the rocket thing, we were up 160. We basically lost 100 points in a few minutes. And then next thing you know, we're back up again. Now we're 400 points higher. So, and if you remember what we said months ago, we're in the 2000 type environment now, where pullbacks, it was even harder then, because you could be in a stock like Yahoo that got, that was screaming higher, and then all of a sudden Yahoo may close down. Next day it comes in, $4 higher or something, and goes up $10 on the day. That's the sort of market we're getting into now, which becomes more difficult to trade, and is certainly fraught with a lot more risk. So, but I think certainly the people who've been on the show for a long time, and you yourself, I mean, remember what we said about this tax cuts long ago, that you could not even imagine the way this market's going right now, other than I said, the 1986 experience was, the market was up for the whole year, and we are obviously emulating that, if not exceeding it. We're not actually exceeding it, because 86 was even more dramatic, the gains for the year, except possibly the Nasdaq, which being up over 40% now is a really big deal. But the upward momentum in the market from basically the late 85 really through 86 was monumental. And then when the tax cuts came out, the market went into absolute overdrive. It just went beyond monumental. The next stage upwards in the market was phenomenal, practically beyond belief. So that's what we try to forewarn about, a long time ago, really since Trump got elected. We've been saying that, or since the tax cuts really, got on the radar. So, this is, and if you go back and measure, where we've come from, September 28, 2015, and the double and the retest, February 10th, 11th, you have a kind of a carbon copy of the 85, 86 scenario, of which we're enjoying something that is just beyond. It's a joy to see it today, frankly, to see this market, to experience this, what's going on here, the incredible power of this market, and what it's actually doing for the benefit of every citizen in the United States and around the world. This is a great time to be alive. There's no doubt about it.
Yeah, I'm telling you, I opened the show with that, everybody listening to this program, no matter what your age group, how young or how old, this has been probably the most memorable year in any of our lifetimes.
Exactly, it absolutely has. And while Trump sort of does a few things that we wish he wouldn't from time to time, a lot of times he's right, and he's certainly shaking things up in a way that's never happened before. And but many very positive things have happened, and there's probably a lot of stuff going on behind the scenes as well. But this market, I mean, as I've said a million times, he might be 42%, which is, you can probably add another 10% to get the real number. But the ultimate pole is the Dow right now. And I mean, look, you remember when I came out at 24,000 when we were at 22.75. I mean, I went to 23 and then we went to 24, and people, I mean, probably people listening to the show thought we were bonkers. And I came out a few days ago and said 26,000 to 32,000 in the next few years absolutely cannot be ruled out now with this kind of market going on. And it may sound, I mean, because look, it's all, we're in a kind of a mode right now where practically nothing can change what's ultimately going to happen with the economy. And the more the economy goes up, the more the market's going to go up. Because if the economy grows at 4 or 5%, stocks like Facebook and Google and Amazon are going to go, parabolic, which we also have said, repeatedly is looking like it's going to happen. After this correction we had, we had about a 20%, 10 to 20% correction in Amazon price line and these things, and now we're in the next up phase. And I said, if we start going to new highs, okay, fasten your seatbelts. So now we've got, and now we've got a little bit of a pullback in the fangs. They're not actually moving right now. And yet the market's going ballistic because the banks are all going to new, almost all records today, and the transports. So, and look, today and yesterday, we have the absolutely the mother of all Dow theory buy signals, bar none. There's never been anything like this. And not only that, we've got the mid cap. I mean, the mid cap is absolutely on fire. This is what I have to say to people, and just to emphasize what's may be coming based on 1986 experience. I mean, remember, it's kind of like what we were saying yesterday. When you go up one decade, it's hard to see you going up and doubling it in the next decade. But it's like you go up 1 year and it's hard to see us going up another, the same amount the next year or even more. But remember, from 1999 through 2000, the Nasdaq went up 100%. So you cannot. And we already came out with the $10,000 Nasdaq potential, 10,000 Nasdaq forecast. So I mean, we're closing in on 7,000 on the Nasdaq right now, which is an incredible number. So the power of what's unfolding here. What I'm saying is, in a way, if the Fed came out and started raising rates 20 times and took us up to 21%, like they did in 1979, which I wouldn't rule out, it's not going to stop this juggernaut. It's actually going to be like throwing gasoline on the fire. So, the incredible power of 4 major economies, Europe, the U.S., Japan, and Britain as well, I guess, and other central banks around the world, all stoking the fire and doing it, in coordination. I mean, they've kind of like primed the pump, and the pump it's like a beating heart. It's still got a lot of momentum, and we're really starting to see that upward momentum today in a way that. And it's kind of like, remember when did Yellen come out and said, higher valuations or high valuations? It's a little bit like Greenspan coming out in 1997 and saying, irrational exuberance 3 years before the top. Mm-hmm. And that's kind of where we might be today. I'm pretty good. You can probably guarantee the Fed's going to come out and say something about high valuations in the next Fed's meeting. So, this is... And everything we've said, I mean, look, you look at the U.S. economy in a kind of a magical way. When the U.S. economy gets into trouble, and the U.S. has been through a really bad 8 years, and then some, that we've got to straighten ourselves out and get back on track, like we were in the 60s and the 80s. It's sort of, that's what's going on here right now. It's the emancipation of America, the renewal, the renaissance of a mega power, and all of the, so everything's starting to hit on all cylinders to make that happen. But what I'm getting at is, twice before, in the Depression or after the Depression, we had 100% debt to GDP, and guess what? We got it back almost to nothing. And the second time was after World War II, and then the 50s we got it back again to nothing. Well, this is the third time, and as I've said a million times, there's only one way out. The worst, if all this hadn't happened, and like Trump says today, we'd be down 50% instead of up 50% if the Democrats had won, which I don't think you can rule out. We'd be in a world of hurt right now, and gold would probably be at about $5,000 an ounce. But the opposite is happening, and this we are growing our way out of this problem. And you know what? If we did get 2 or 3% extra growth, that is trillions of dollars that could seriously, reduce the deficit, or at least stop it from rising further. And ultimately, the bigger the economy grows, the less problem the deficit's going to be in the future. So, while, almost nobody believes the deficit can be reduced, but stranger things have happened. It's happened twice before. And this may be the big, if the Dow goes to 32,000, I would honestly say the deficit could be reduced substantially under those conditions. Because, there's so much stuff, like China, maybe one of the reasons why China is stalling somewhat in growth is because it's a pretty new country. Most of the stuff that's being done is all modern. It's not, the US is more mature. It's got so many problems with its infrastructure. There's trillions and trillions of dollars needed to be spent on infrastructure in the coming years to get the US up to 21st century speed. Just in the grid and everything else. So, and these are things that are going to get done, especially if the $4 trillion comes back from overseas, which is virtually inevitable. And if they get, nobody's come up with this yet, but what if we had a multi-trillion-dollar stimulus, which we might end up doing, in the next few years? That will create a huge amount of jobs, and it will make up for the anemic stimulus that Obama came up with, right after the problem in 2009. If they'd got $1.5 trillion stimulus back then, or 2 trillion, I think the economy, the whole of the world would have been much better off. We would have had a much bigger and faster recovery off the bottom. As it is, we didn't, and that's part of the reason why they booted out this doctrine, and now we have the Trump doctrine, which I don't think anybody with half a brain is going to be against in terms of what's happening with this market today.
Yeah. Let me open up Ed's mic. He's here with us. Hey, Ed. Welcome to the show. Are you there?
Hey, Dwayne. Can you hear me?
Yeah. John and I are here. Waiting on you,
John.
buddy.
Yeah, I just heard John talking about the Trump economy. There's so much. Did you see where the consumer confidence went to a 17-year high?
Yeah, no, it's. Listen, I would have to think, I'd have to hope after this that the consumer confidence it's going to hit an all-time high here in the next few readings for sure. But it is. This is a really, really exciting day, and it is really a pleasure to experience, and I think it's gonna, the more of this we see, I think the more converts there will be in time to Trump, and and they're just gonna have to tolerate or put up with some of his idiosyncrasies. Listen, every president have their, they've all had some kind of a fault here and there, and look, if the price we have to pay is a bull market of this magnitude and hopefully a raging economy for the foreseeable future. What's not to like?
Yeah, exactly. Well, it depends. I heard you say something about.
Sorry, you're fading there a bit.
Can you hear me?
Yeah, it sounds like you got way far away from the mic.
I'm going to have to get me a new headset. There must be a short in the
Yeah, just jiggle the wire or something. Sit up straight. I don't know.
Did I talk louder?
Well, it's so. I mean, you were loud and clear. It sounded normal, and then all of a sudden, you went away. We can barely hear you. I don't think talking louder. Can you jiggle the cord on your headset? Maybe that's.
Yeah, let me just. Anything?
Still pretty far off. Why don't you unplug the mic and plug it back in? Is that easily done?
Yeah. Hello?
Yeah.
Still no good, huh?
Yeah. Well, you're still, like I say, it just sounds like you're far away from the microphone, and I know you got it right in front of you.
For the life of me, I don't know what to do with it, Dwayne, except get me another headset. I don't really have my backup around. I don't have it here. One of my kids took it. So I'm sitting here on a cheap one, and the more expensive one worked worse than this one.
Now all of a sudden it just came back.
It came back right now?
Yep.
Well, I'm not going to move. I'm going to try not to touch anything.
All right. Yeah, we
I don't know what else to do.
We can hear you perfectly now.
Okay. Where were we, John? Talking about? I was talking about. You mentioned something about people would have to have half a brain to not see what's going on. And unfortunately, maybe that's the case in our country. I worry about us, for that regard. But I think the spillover effect that you're talking about happening is it eventually will get to people's pocketbooks, and they'll be willing to overlook the things they don't like personally about the man. Certainly he makes things a little harder on himself, but if he wasn't so bold, we wouldn't get anywhere. I mean, I hate to say it. It takes somebody like that to change the course. And can one man do it? I wish he could get a few people behind him to help him, that are elected. And there are a few of them, but it takes more than a few. Hopefully, they'll get this thing right. Hopefully. But man, look at that stock market. This is just the way it's looked for a few years, right? And now this is when it starts to get this new phase of acceleration here. It's going to be really interesting to watch. I have to be honest with you. I've been preoccupied with Bitcoin, trying to find a way to do something on an exchange with Bitcoin. And I've got a couple stocks that I've been in, and I sold them all yesterday because they just gave me too much too quick. That's why I got out. Too much too quick. It was just, and I had a couple signals tell me that, it was at least a temporary top yesterday. So I wasn't willing to sell when it was at the highs, but I set some thresholds to reduce my position. And by the time we were near the end of the day, I just got out of everything, but related to it. But the stocks are, I don't know, have you traded any stocks at all that are an ETF, that exchange traded note or anything? Because I found one with Bitcoin after searching, and then I picked a little stock that's called Bitcoin Services. I'm not touting it at all. I mean, you see how much it's moved in the last few weeks. It's just crazy. Up and down. So, have you done anything with them, Dwayne, yet? I know you've probably done the coin, right?
Done anything with what?
Bitcoin or Ether or anything like that?
Well, we launched the CT Global Coin, and I do own some Bitcoin and some Ether. Does that answer your question?
Yeah.
Okay.
I just wondered. Yeah, I have not got into the wallet stuff and all of that, even though I had some help. I just subscribed to a service just to see what they knew. But still is kind of you know, you like to get your hands on something before you put your money in it.
Mm-hmm.
And I use that as an excuse not to be in this thing for the last few years. But I realized a couple months ago that I had to do something to learn about it anyway. But now maybe the stock market's going to start to look like Bitcoin, huh? This is wild today.
Yeah.
Anyway.
That's a little, I agree with your comment, a little too much, a little too fast.
Yeah. Yeah, but the trend is so strong, and it's shown that to us. And, you know, John was looking for the moonshot, and I certainly wasn't willing to step in front of this thing. The only way you could be in an uptrend is long or out, but certainly not short. But I know a lot of people that got hurt trying to short the stock market on the way up after years of losing money. And I don't understand that. If you find yourself going against the trend and you find yourself losing on, you know, trade after trade with the same mindset, you got the wrong mindset. And you know what? It doesn't feel that way when you really sure or have a conviction that you're going to take a position in the market. You can talk yourself out of having a lot of common sense based on how strong your bias is. So, you know, you got to protect yourself from your own perspective sometimes when you have an idea. Let me
put these charts over to you.
Okay, I'm not sure. Okay, yeah. And I'm going to try and let me get this thing here. I'm going to have to guess which screen to put it on. I'm a little messed up on my screens right now.
Okay, ball is in your court.
Okay, let me try monitor 2 and see what comes up. That doesn't. Can I show a different screen here?
You can show any screen you want. Okay, that's your quote board.
That's my quote board. That's not what I want to see. I can't tell which one is. So that was 2. It must be 3. Do you see a chart now?
There's a chart. Yep, sure do.
Okay, good. Crude oil, you know, they just came out and agreed on to extend the cuts to the end of 2018. And what's going on in the crude market now is we really don't have much of a surplus at all when you look at overall stocks. We pulled our product stocks down really quite well, and really the only excess is in Cushing crude right now, in Cushing, Oklahoma. But overall, we've pretty much wiped out most of the stock surplus as of today. As we approach the $60 level, which by the way is the 59.97 is a 382 retracement back to the last major reaction high, which on my charts is like $118. It's sitting there at 59.97. So that could be really pivotal to this market. I think it's running into trouble there because when we got up into the 59s, you could see them start to come in and hedge. And I think what's happened is they really haven't gotten drilling like crazy, but they're developing enough wells that come 2018, if the dynamics stay the same as far as demand goes, we could have a problem in 2018 with the supply side because they are going to crank up the production. We are. And with OPEC and Russia, you know, just agreeing today that they said they're going to extend this thing through the end of 2018 should give us a pop to the upside. It got us off the lows, but it really hasn't done anything yet for crude oil. So I'm so far, I want to see the game played around the $60 level. because that's a nice 382 retracement. It's a nice psychological level. And I know that some of the production has been sitting on the sidelines waiting for that number. So I do believe we'll see some production selling up there, and the market will not be able to accelerate through that level comfortably without a boost from something going on in the Middle East as far as supply disruption goes, or Venezuela's already way down in their production. There's a lot of stuff going on in Libya, and Venezuela might completely come unglued here as far as production goes, and be off the map. So as far as production goes, just go away for a while, because they're not really able to. They're not able to hold it together right now. It's falling. Their production is falling fast. So just the operation of the production. So as far as oil goes, I think $60 is an important level. My projections for the year in the mid 60s. So I don't think it's going to make it, but we got December to get through. So we'll see. I'm not thinking those projections are going to get hit. So as far as oil goes, I'm kind of on the fence here, even though I'm in a third wave up here on my daily count. And Brent is not quite as strong as WTI, which has really changed the picture here quite a bit. There's Brent. It has been in the lead for a long time, but it's relinquished that lead to WTI. But when they start producing more oil in the country here, that'll take care of the WTI strength. I think it'll have to be pulled up by Brent eventually next year. We're still tight. The markets are still tight in the current phase, but that could go by the wayside here when we get into next year. On the S&P, what can you say about the S&P? This, folks, was a wave 3, the thing that's counted as a 1. We came down for wave 4. That used to be a wave 4. And lo and behold, and just to look at the Elliott wave counter, see, we came back. This was a wave 4 minimum retracement. When we got to the 0 line, we went a little bit below it. You can see down here on my chart. And then we turned back up. This went back was counted up to a 5 around here, and then when it extended enough, it went back into wave 3 here. So it changes count. This used to be a 3, this used to be a 4, and it's now back in wave 3. This is why we like to buy the wave 4 retracements to the 0 line when we get a buy setup. After we get to the 0 line, I'm looking for another reason to buy. So, because in a trending market, especially a strong market, it will just rip right back into wave 3, which the S&P's been doing this for years. So people say, well, what good is the Elliott wave if it can go ahead and change without even having a conscience about it, because it's a mechanical counting system that I'm using. But I like to know what it says, and I like to know what it says, and on the shorter term charts it makes it more tradable. So I've found it useful for me, but I cannot be locked into just this one thing. I like the framework that it gives me to look at the overall markets, but when it comes down to it, I know that this is just a count that can be changed by the strength in the market. And the S&P has been doing this for years. That's how, it's extraordinary actually that it does this time after time. That's why we are really in a runaway bull market, and we have been, and it's looked that way for years. And you don't want to step in front of something like this. That doesn't mean you can't short it and day trade it when your stuff says to do it and you know the odds are on your side. There's nothing wrong with that. There are some things wrong with about taking a long-term view that the market's going to peak here or here or here. As vertical as it looks right now, you know, we'll see where it closes. I always like to see, you know, if a market closes positive on the day, it means something to me. It means that the buyers are still in control. So that if I'm anxious about something, or I think it's going to top, I'm at least going to have to see some closes. Weeklies, monthlies, you know, the dailies, not so much, but I'm watching the dailies. I mean, if I'm trading on that time frame, certainly I can trade those to the downside. But why don't I just trade them to the upside when they turn back up? When I see momentum turn back up, a reaction high get taken out, why don't I just take it to the upside? That's the trend. That's the easy way to trade. Trade easy. Trade with the trend. Put something that puts the trend on your side in the time frame you're trading. Okay? Yeah, you can trade 30 and 60-minute charts and you have a totally different outlook. But understand that the current right now is to the upside until it shows us differently. That is what it is. And it doesn't matter what I think. So this thing launches back into the third wave. This too was a 4 or 5. It's back into the third wave on the 500-minute chart. So you got to say that this is a very, very impressive move. Everything's in third wave up, guys.
Huge.
Look
huge
at all
move.
these charts. I mean, keep subdividing this into smaller and smaller charts. Oh, we found one here, but to get the right wave count here, I need to go to like an 80-minute count. Yeah, this thing is hang on. There's the fractal down there I'm measuring from. So let me just make sure that's on my chart. I have to make it go all the way across the chart for the stats to be valid on this. It's still counting it as a fifth wave, but looks to me like it's going to go high enough that this too will get recounted. It has to go a ways to do this, but it still could do it because of the slope here. And so if it closes strong, you know, I'm not concerned about the move right now. I'm more concerned about it continuing here to the upside, of which it probably will do. And when I subdivide this one more time, notice I'm trying to get the right sequence across. I'm in a third wave on the real short-term time frame, the 15-minute chart, which should find support. This would be the normal wave 4 projections on a pullback. Okay, right here you see the 2 4s marked. That's normal. That would be normal for the market to fall in there, hold, turn back up. Will it get to the zero line by the time it gets there? It depends on how long it takes to get there. If it gets there in the next hour, let's say, or within the next 3 bars, this thing could come down to the zero line. But if it takes its time up here, it could take till tomorrow before it reaches the zero line. And it can get to the zero line. It can get to our wave 4 retracement without coming off a whole lot more. It can do it by going sideways, because the MACD is a time and price sensitive oscillator, and it's not bounded like an RSI. There's no 100 thing to cap it. It's unlimited to the upside and the downside. So it can be affected by time, the time it takes to get there, or it can be affected by the acceleration in the short amount of time that it takes to get there. It will respond quicker to an impulse down that gets us here in the next hour or so. We could get close. Otherwise, we might be tracking along here we could go a day or two before we get back down there. But this looks like there's some more people that need to cover their shorts to me. And if you ever think there's no people who could be in that thing short right now, don't kid yourself. There are people in there that are short. I can guarantee you. They don't like it, and they got their head underwater right now. So it's a matter of how far does the market need to go to scare them all out, and that's when you get the spike, and we'll get a decent pullback, which should, by the way, be bought.
Where is the pain threshold?
Right. I've been there. Have you, Dwayne?
Oh, yeah.
When I used to hedge the company's refined products, I would hedge them in gasoline and heating oil, distillate. And there were days I had such big positions on that I was on the wrong side of the market, and I could not help it. I won't go into the dynamics why, but we were trading the margin between crude and products. That's what refiners do. That's their profit margin. And we were a refiner. So I only cared about the difference between crude and the products. And when it got to be an acceptable profit margin for us, I would start selling it out in time. And when it got to be an obnoxious profit margin, I'd sell out almost 90% of our production for several months. But in a big thing that might happen in the Middle East or potential supply disruption, really got painful trying to get out of those positions. And I couldn't get out of them very fast. And I had to cover like 5,000 contracts one day in a gasoline. And I couldn't get out of them because the market kept going higher, and I'd put it in it to try and buy back my shorts, and it just keep going higher. They wouldn't sell me enough. So I got fed up after 2 hours. I only had 4 hours left to go. And I told the guys, I said, look, I want you to buy me 100 contracts every 10 minutes. I said, I don't care where the price is. That's how desperate I was to get out of that position, because I had to get out of it. I wasn't going to deliver it onto the exchange. And it was so painful. I can't tell you, Dwayne, that was one of the worst trading days of my life, just watching it. That's what I had to do to get out. I gave them and they knew me. We had specific brokers that we used on the floor. There was no electronic trading. So, you know, they didn't take advantage of me, and they didn't tell anybody. But they started figuring out what we were doing, because they saw the guys saw, you know, I had 4 different firms that traded for me on the floor. So I rotated that amongst them. But the guys on the floor figured it out, and they made it harder for me. You know, they were coming in front of us. They were watching the clock. But that was really bad. But that's like a guy having his head underwater and he can't breathe. You just can't stand it. So that was a tough way for me to learn a few things. That was really tough. This is a nasty day on gold. I don't know if John said anything about it, but what they've done today is very problematic in the gold market. Do I think it's going to fall apart? Probably not. But anybody who thought they were close to breaking this thing out to the upside, which they teased us the last few months in here, it's going to make it all the harder to do. You know, this is really even though the monthly and the quarterly wave counts look pretty good on this thing for a wave 5 up, they just they will beat us to death trying to let this thing out of here. It doesn't look like it's ready to go right after. Today is pretty disappointing for what's going on. I still have some long calls. They're out into next year. I'm not worried about them. I knew what I was doing when I got into them, and I knew I was buying some insurance. And I'll still insure me.
What started as a passion to make something original,
after today, we'll see. I'm not going to sell it. So we'll see how the gold shakes out here. It can change pretty quick. Natural gas has been as flaky as anything I've ever seen. What it's been doing is, if it has a really good up week, the next week it has a really bad week down and closes bad, and it comes in the next week and all it does is run up that week. And if you look at the oscillations on natural gas on a week-to-week basis, and it will drive you nuts. I mean, it's crazy, guys. It's crazy. Absolutely nuts the way it runs. Look, it crashed here like there's no tomorrow, right? Got down to 290. And this is this week. So this is where we closed last week, okay? So what does it do this week? Immediately it gaps higher. Okay, it jumps higher on the opening and runs up. And they run everybody out of the shorts, got over 320, and now they're right back down today to 303. This is so crazy. If you look at it on a weekly basis, I've been following it for a long time, and you just look at the weekly reversals up and down in it and how they occur. If it goes up, it comes down. If it goes down, it goes up the next week. It's just, I've never seen it like this, but it's been like this for now a few months. So it's just stuck. It's congested. The market's in equilibrium. It's balanced. This is where it wants to be. It wants to be around that $3 area, you know, and it's got its boundaries, and it's just range bound. So you can trade the range if you want. The problem is when they have a week like this, and it's a breakout week over like a 20-week period here, and you close strong, it looks like it's ready to break out. 322. It's broken out over this. And what did they do the next week? They opened it here, and they knocked it down. And then they pulled back up a little bit, but they knocked it down 2 weeks in a row here. Like, now there's no tomorrow, right? So they got it down 2 weeks in a row, and now look at it. Come right back up to the highs. And they're pulling it back again now. We'll see what they do tomorrow. It could go anywhere tomorrow, I guess. We'll just, I hate to sound confused about it. It's just not worth messing with. So I've been spending my time on something more exciting. I know you're watching it, Dwayne. And Bitcoin is quite a sight here to see. This is a daily chart on Bitcoin, and it's in a third wave up. We had this big move yesterday that reversed pretty sharply. At the end of the day, we had a huge range on the day. We had a range of like $2,200 from the high to the low. $2,200, you know, is basically a 20% range. And it's really a big deal, especially when you go from one extreme to the other. And so here we are today. We're trying to congest this move. But I think it's the first time that the bulls have had some heat put on them that they're thinking about selling. I am watching it with great interest right now because I dumped my position in these smaller stocks. But let me just finish the count on this and before I jump onto them. So here's the daily count on this thing. This is a third wave up. Very clearly, we've been in wave 3 up here. Now, this isn't like the S&P in that this has been the wave 1 up. Okay, this isn't switching waves. This is going to have a hard time pulling out of wave 3 because look where the MACD is. It's way at it's the highest point on the chart here, right? Right here. It's got to come all the way down here to hit the 0 line for wave 4. Now, if it's going to be a wave 4 retracement, we would like to see it, would normally see it, between the 382 and the 50% point here, which you can see where they are, that the 382 is at 81.67 and the 50% point is 71.79. That would be a normal wave 4 retracement. But to say Bitcoin's anything but normal is the truth. It isn't normal. It doesn't necessarily follow the rules that Crude or the S&P will on these fib numbers. I'm still trying to figure out which ones are the higher probabilities in these pullbacks. And I haven't looked at it long enough to really figure it out. I don't have enough data. But I'm watching this because it did right here. This is a 236 retracement back to this. But if this is a third wave up here on this third wave, and it may not be, actually this might be it for this, then this would come back normally in here more than a 382, which is all, this is what's held yesterday and today. It got a little bit below it. But I would say right now it's holding it. So this would be normal if we're just pulling back correct in this wave. So I watch both numbers, sets of numbers, to two different fractals. This is my first fractal here, and this is the second one. So we're counting back, we're measuring back those. The Elliott wave is valuable on the Fibonacci retracements. When you combine it with them, it gives you more of an edge that you're not just taking point to point, but there's also some underlying Elliott wave psychology, so to speak, because Elliott wave is very, it's a way of measuring emotions if you want to know the truth. And it's a way of measuring traders' emotions and how euphoric they are and how, you know, the market gets overextended. And those patterns tend to repeat because we've always got people trading with this in mind. You know, we all have certain similar traits that we react to, and we don't react at the same times. But that mass psychology tends to really fit in the Elliott wave ideology. So I'm watching this, and I'm saying, okay, I know that I'm on a learning curve here. I know that. I'm trying to learn what is normal for Bitcoin, if anything, yet. And the market, you know, will probably change when they introduce the futures. Dwayne, I want to talk to you a little bit about that. But these are the stocks that I've been in. This is GBTC. It says it's an exchange. It's a trust, and they hold Bitcoins in this trust. It's not listed on a major exchange, and this is it right here. Across here, you can see that's per share. It's $1,572 a share right now, and you can see the bid and the ask price, and the spreads they're reasonable, and so I've traded that. That's what I sold yesterday, and I got in here at $860 2 weeks ago. It was 2 weeks ago yesterday when I got in, and I sold it yesterday. But I sold it after I saw it reverse, and you know, so I didn't sell it at the highs, but I had my eyes out because I wanted it to hold $10,000 first time up, and I told myself if they reverse it, if they get through $10,000, it needs to come back and hang in there. But it looked like it was going to go down, so I got out of it. And just to give you an idea, this is an obnoxious move, right? Because this is not normal. I was very lucky to get in the thing, and I'm telling you, it was pure luck. But I got out of that thing, and I was afraid to get out of it. I said, well, what if they take this thing back up? You know, Bitcoin isn't necessarily over with to the upside, and I don't believe it is. But it could finally give us more of a correction like I showed you on the other charts. Right. And then this little stock here is BTSC, and I'm not promoting anybody get in these. I'm just going to show you. This is why I got into them. I just did a search on my Scott trade system here, and I searched for Bitcoin, and these three stocks came up: GBTC, BTSC, which when I got into that, it was 9.5 cents. You know, I got in back in here, 9.5 cents. I got actually back here. And yesterday, you know, and I mean, it's trade for what, 9 cents. So the thing was, it hit 63.9 yesterday. 63.9 cents was the high. And when I told myself, you know, the market has given me enough money here that I'm not going to stand for any reversal. Now, I got out of my position yesterday in this too, but I didn't start selling it till you know, it was basically at 64 on the highs. I didn't start selling out of it till 55. I got out at some at 55, and I got out at some at 50. I got out at some at 45, and I got out of the last piece at 40. So this is where I got out because it was too much acceleration on a day that, you know, I saw Bitcoin falling $2,200 off of its high. So I just got rid of it. Now I'm a little antsy because I don't have a position in it now. So we'll see. But it's cheap. It's 42 million shares it's traded so far today. You can see the bigger one here. It's 127,000 shares. So that's not all that great. But that's normal for it. It doesn't trade a lot. And this was the other one that came up. I didn't buy it. And I'll tell you, it didn't go anywhere. These two went crazy. This did not. And when in looking into it, I found a little bad press on it that they thought it was overrated. So I bought this thing because I could buy it for 9 cents, and this thing was trading 50 cents. So it didn't even go up with these guys. They went crazy. Yeah. It did not go up. So I just think if you have the mentality for it, you got to really know where you're going to go in and where you're going to come out of it. And you cannot bet a lot of money. Those were the smallest, unfortunately, the smallest positions I've put on in a long time. So I wish that wasn't the truth, but it was, because I wasn't real confident. I'm trying to learn. And you know what? That's the only way to learn. Bet small if you want to learn something, but just get in. And it'll imprint into your memory bank how these things behave. And that's an advantage. Okay, just to get the experience. I didn't risk a lot of money, and to my surprise it was crazy, you know. But recognizing that, you know, I think Bitcoin's going to still go a lot higher. My biggest fear is when they start the futures contract on it, Dwayne, it'll give they're saying that you know, the hedge funds and the endowment funds, they guys have to be on related exchanges, most of them,
right?
And so that's going to open the door to them to start getting in here. I don't think those guys will have the mentality to come in to sell it. They want to get money out of something like this. They'll want to go to. Some of them might want to go in and short it, but I know this: if the government was worried about Bitcoin, they'd make sure the CFTC wouldn't approve these contracts.
Right.
I don't know that they've approved them yet, Dwayne. Best I can find out, they haven't.
Well,
and they're saying
the one at the CME and Chicago Board of Options, those are approved and set and ready to start trading. I think it's December 12th.
Well, is that going to be the futures contract or options?
The futures contract at the CME.
It's a futures contract for Bitcoin, right?
At the CME, right.
And that's
NASDAQ is also coming out with a futures contract in the second quarter of 2018.
They are. Okay.
That's according to the news that I've read.
Well, see, but the Bitcoin futures contract is, from what I read, is going to be settled with cash, not Bitcoin.
Right.
Okay, so they're not going to be delivering Bitcoin. They're not like crude. You have to deliver crude. Gold. You have to deliver gold. I mean, it's a point to point. This is the real market kind of thing.
But with futures, it's rare that people take physical delivery of any of it.
Exactly. But the fact that they can makes the price more real. Right? The fact that they have to, or you can have people short the dickens out of this if the broker will let them, or if the CFTC has hedge fund, they allow the hedge funds to do more, and they allow the commercials to do more. When I traded commercially for oil companies, we had our hedge fund limits, and because we were in the business, we actually had the inventory. I mean, I could put on huge positions there and no questions asked, just because we were commercial. Well, they can approve, a bank or somebody like that, they usually give the bigger guys big limits that they can come in, they can play with these markets. I just worry a little bit that they'll get in there. If the government if this thing keeps going like it is, the government's not going to want it to keep going, I don't believe. And they'll take advantage of that, the fact that they have the money and can print whatever they need to cover these margin calls and just keep selling. I don't think they're going to do that right off the bat, but I just know that's in the back of my mind. I mean, there's a lot that's been said and even shown about the gold market, that there's been a lot of manipulation in that market, not letting that price go up because, you know, the countries that have currencies are real sensitive to that. They don't really want an alternative to their currency. So it's not going to be a one-way street when that thing opens. You know, it's going to be real interesting. I'm real excited about it, Dwayne. I'm already enabled for it on the CME. That's what I'm showing the Bitcoin tracking index on my charts. So, but I just haven't been able to find out specific. But you're saying they are approved for it, huh?
Yeah, I mean, you can go to the CME website and it's all right there.
But they're just saying the second week of December, right?
Well, that was the last press release. It was the second week of December, and then I heard, well, here, I'll just...
Is that next week?
Well,
tomorrow's
the 1st. This is the press release that came out way back October 31st. CME Group, the world's leading and most diverse derivatives marketplace, today announced it intends to launch Bitcoin futures in the fourth quarter of 2017. And the last info that came out said that everything was on track. So, you know, there hasn't been any news contrary to the fact. Not that I've seen.
Okay. Well, yeah, Bert would I guess Bert would he know anymore? You think should I call him? Maybe I should call him.
You can try.
As far as DT Pro, I guess they're going to have their own symbol for it, right? Or Gain Capital. Gain Capital got some press, didn't they, Dwayne? Did you see that?
No, I didn't. What did they get?
And their price got a big bump out of it too. Their stock price got a nice pop.
What was the news
because
about?
They said they were the first ones, brokerage firm, to come out and say, we're going to cover that futures contract. We're going to have it on our system. They were one of the first ones to say that, and people start buying their stock. So
gotcha.
I don't know. We'll see what happens. It's going to be interesting. So you're in a learning phase too, right, Dwayne?
Yeah, the whole world is.
Yeah.
The whole world is, brother.
Yeah. Yeah, I'll say it is. It's going to be baptism by fire, I think. Oh, well, look, I'm going to jump. Is there any way I can chat with you this afternoon for about 5 minutes?
Yeah, just give me a call.
Okay. I will give you a call a little later.
All right, brother.
Okay, thanks.
All right. Thanks so much, Ed. We enjoyed it.
Okay.
Appreciate it.
You too.
We'll see you in 2 Thursdays.
Sounds good.
All right, brother. Ladies and gentlemen, Mr. Ed Corey.
Bye-bye.
Take care. Okay, let me grab the charts back. And there we go. That ought to do it. Should do it. There it goes. Okay. So, on the S&P 500 last night, on the Concierge Trade Alerts, we said to consider buying 2628. Put in a high at 5850. It's basically a 30-point run in the S&P. And if you're trailing your stop on that, you should be getting out probably right in this area. Although, that doesn't mean the move is over. If you just draw some simple fibs from where we consolidated there, and then began this last leg of the journey, we are approaching a 24% retracement, and then right here we are approaching a 38% retracement. Here's the 50. So we could easily go leg, retrace back to the 50, maybe even the 62, and still put in another leg. So I mean, is this it? Is it the top? I wouldn't want to bet on that. I'd rather wait and see. So there's the Dow. Okay, and on soybeans, we had a misprint last night. I gave everyone an opportunity to grab a screenshot. I'll give it another chance right here, right now, in case you didn't get it the first time around. As soon as it loads, there we go. There we go. Okay, so if you're logged in through GoToWebinar, then the little camera at the top of your window, click it and it'll save the image right to your desktop. Otherwise, use whatever else it is you use to do a screen grab. Okay, all right. Now, so there's a misprint on soybeans, and the prices were wrong, and so we were already below the sell price. It was a typo, but at this point all I can do is call it a misprint. It simply was not tradable the way we published it, because price was not in that area. So moving on the NQ, we got no trigger. Okay, we had a pretty high buy target, and we didn't trigger on the short side. So with all this movement in the NQ, just the nature of our methodology, didn't get it. No trigger. The Russell kind of been stuck going sideways. We did say in the email last night, consider buying 1548, and it did make it up to 54, so 6 points. The Dow ran up, well, it was 200 points the last time I checked it. So 23,995, so we'll just call that 24,000. And we put in a high at 328. So we'll call it 300 points plus. That's what the market made available. Now, we never get out at the swing high or swing low because we trail our stop. Very important to understand that and be okay with that, right? I mean, if you were trailing very closely and got stopped out, say down here, when price pulled back, and then you saw it go way to here, don't lose your lunch. Just know that's part of the business. All right. Early on, a stop out for bonds. We had said to consider selling 152.27. Important prices, important areas, almost always tested. It came back through after the stop out and has now dropped to 152.04. And that was a sell at 152.27. Okay. After a stop at 31.25 per tick. Okay. Now, that might have created too much risk for you to even take the trade on a 30-minute chart, which means you got to drill down to a smaller time frame and see what's happening. Okay, the swing low here is 152.04. So from 27, so we're talking 23 ticks. Times 31.25. 21 times 31.25 per contract available. Now a 32 tick move, there's 32 ticks to a point. 32 times 31.25, that would be $1,000 per contract available. no matter how far it drops. Again, we don't get out at the swing high or swing low. We trail our stop, which means you're always going to leave a little something on the table. Crude oil. Yesterday we came down, hit the zone right on the nose. Make sure that is this 56, 75, 80. Yep. Overshot the zone on the way back up. Came back down today. Missed it by a tick. Last night we said to consider being long 57.75. Had a couple opportunities to do that. The first run up was good for $230 per contract available. And selling 57 1/4. This leg here, okay, it's good for $400 per contract available, and this one here about $320 per contract available. Again, don't get out of the swing high or swing low. Trail or stop. Let the market take us out. On gold, we said to consider selling 1281. The first move down, there was $200 per contract available. Leg, retrace back to the zone, confirm, just like here. Confirm that that's going to be good resistance. Down we go. Pull back, confirm good resistance. Down we go. Now what are we doing? We're pulling back. And this will either confirm good resistance and it'll give us another leg down. This is our lowest weekly zone for gold, 67.68. So we're at that critical point here. Okay, on the pullback, this will serve as good resistance. And we get another leg down, or we move higher. Okay, and that covers other markets. And so we are getting the pullback here in the S&P. Pass on that and grab this. Okay, so we looked earlier, we were approaching that 23% retracement, and this is a 30-minute candle. There's still 14 minutes left in the life of this candle. Anything could happen. Let's go to our good word for the day. One moment, please. There we go. Now, fair play is a huge part in everyone's life. In fact, fear not is rumored to be the most quoted phrase in the entire Bible. Did you know that? So for the next couple days, we'll talk about overcoming your fears. Job 11:18 says, "You will be secure because there is hope. You will look about you and take your rest in safety." Job 11:18. Famous people throughout history have suffered from phobias. Napoleon III was crippled by ailurophobia, an irrational fear of cats. Queen Elizabeth I was allegedly terrorized by anthophobia, an abnormal fear of flowers. Billionaire Howard Hughes was practically incapacitated by mysophobia, a pathological fear of germs. Both Edgar Allan Poe and Harry Houdini are believed to have suffered from claustrophobia. Even the father of psychoanalysis, Sigmund Freud, is said to have wrestled with agoraphobia, a fear of crowds and public places. Now, we started this little mini-series the other day and we didn't finish it. So I'm going to go back. This is installment 1 and there'll be 2 more. Trouble is that many of us deny dealing with any kind of overwhelming fear and rarely consider it a serious problem. But the fact remains that our fears hinder us on our journey towards change, and unless we face them, we'll never reach our God-given potential. Maybe you don't view the thing that's bothering you as fear at all. It could be a feeling or situation that you habitually avoid or leave it to others to handle. Whatever it is, the only way to overcome it is to call it what it is, confront it, draw on God's strength, and make a decision to change. And today, He offers you His strength to do it. This is a promise you can stand on, because it comes from the Bible. Job 11:18. You will be secure because there is hope. You will look about you and rest in safety. Where does that originate? Again, the Bible, God's infallible word. And here's another fear not promise. Isaiah 41:10 says, Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you. Yes, I will help you. I will uphold you with my righteous right hand. Isaiah 41:10. That's our good word for the day. And stay tuned for part 2 tomorrow. That's going to do it for today, the 30th day of November 2017. A reminder to partners, there is a partners workshop tonight. If you've been on the trial and you need information becoming a partner, Michael should have sent you an email already, but in case you didn't get it, you need the information to become a partner so you can be in the partners workshop tonight. Send an email to support@cfrn.net or call 949-42-EMINI. That's 949-423-6464. Every Thursday night, 9 p.m. Eastern. If you have any questions on anything else, give us an email, give us a phone call. We are always here, waiting to hear from you. All right, that's going to do it for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with the licensed securities broker or financial planner before making any investment decision.